Hello traders, this is a trading tutorial about trading altcoins, and the subject of this tutorial is Bitcoin correlation. The reason I chose this subject is because of a subscriber that actually wrote and told me his problem. His basic problem is that he's taking positions on altcoins, and due to Bitcoin's price movement up or down, he ends up with his stop losses getting hit. And this is a problem, and the name of the problem is called Bitcoin correlation. And of course there are solutions to Bitcoin correlation, and I will go over them. It's going to be a 10 or 15 minute video, but I provided timestamps and you can scroll if you know what a correlation is, and if you are familiar with the material, you can just move on to practical examples, okay? But before I begin, I want to say a few things about the nature or the reason for the Bitcoin correlation. The reason for the Bitcoin correlation is that 99% of the altcoins are just speculative plays. They don't have any inherent value, at least not yet, and they don't have any real demand. So because they are speculative in nature and there is no actual demand for the products, they tend to follow Bitcoin's price because Bitcoin is the leading asset in the category. But when you are trading altcoins, you amplify Bitcoin's price up or down, okay? Now, what is a correlation? In simple words, a correlation is a connection between two things, okay? For example, a connection between ADA's price to Bitcoin's price, okay? Or the connection between Bitcoin's price to the US dollar. How do we measure correlation? The simplest method is to use what's called a correlation coefficient. It's a statistical term. The meaning of the correlation coefficient is that if the values range from -1 to 1, -1 is negative correlation, 0 is no correlation, and 1 is strong correlation. In this table you can see the correlation coefficient values and their meaning. For example, if an altcoin has a correlation coefficient of 0.90, the correlation between this altcoin's price and Bitcoin's price is almost perfect, meaning it will go up if Bitcoin goes up and it will go down if Bitcoin will go down in price. You don't need to calculate the altcoin correlation coefficient because TradingView supplies us with many indicators. I mentioned 3 indicators. My favorite one is called, let me show you again, it's called the Bitcoin correlation. You go to the indicators tab and you write Bitcoin correlation indicator by a developer called O. Henrik, okay? Now, the black line is the correlation coefficient. So, if you go with the cursor and you put the cursor on the black line, you will get the correlation coefficient. Let's take Ethereum as an example. Ethereum's current correlation coefficient is 0.93 positive, meaning it's an almost perfect match to Bitcoin, so you can safely assume that if Bitcoin will go up, then Ethereum will go up as well, okay? In practical terms, what you need to understand about Bitcoin correlation is that you are trading 2 coins at once. you are not trading just Ethereum, you're trading Ethereum and you are trading Bitcoin as well. Meaning that you have to take into consideration the Bitcoin's price action. For example, on October 24th, Ethereum was at resistance, okay? So let's say that you want to go short on Ethereum, okay? For whatever reason. It's in resistance. Let's say that you saw bearish divergences and you have other indications and you want to go short, okay? So normally you would just make up your mind and take a short position, right? But if the asset is 94% correlated to Bitcoin, you cannot treat it as an individual asset. What you need to do is you need to open Bitcoin's price chart, okay? And you look at Bitcoin's price action and you have to confirm your decision, your trading decision against Bitcoin's price action. So let's just say that if Bitcoin was above resistance and tested this resistance as support and you see continuation up, okay, meaning that Bitcoin is a long, you absolutely cannot take a short position on Ethereum, okay? And the other way around, let's say that Ethereum is above support, okay, and it also tested, let's say the 16, 17 level, tested it as support, and you see continuation up, okay? So basically it's a long. But if it's a highly correlated asset, you cannot take a position, okay? You cannot disregard Bitcoin's price action. What you need to do is you need to go over to the Bitcoin price chart and ask yourself the question, would I long Bitcoin? If the answer is yes, then you can long your altcoin. If the answer is no, then you cannot long the altcoin. And the same goes for shorts. When you want to short an altcoin, if it's highly correlated to Bitcoin, you need to confirm your decision based on Bitcoin's price action. Okay? Now, the hard truth is that over time, almost every asset in crypto, excluding maybe stable coins, are correlated to Bitcoin. But sometimes an asset temporarily loses its correlation to Bitcoin because of fundamental news or because of hype, okay? Let me show you an example. Let's say IMX. IMX, immutable X. Let's type in Bitcoin correlation. Okay. What do we see here? It's a bit lagging, but you can see that during the month of February, we had a minus 0.40, let's say minus 0.5 negative correlation to Bitcoin. What it means is that immutable X was in an uptrend, while at the same time Bitcoin was at a downtrend. Why is that? I remember because there were rumors about cooperation between immutable X and Amazon. So because of the hype, IMX lost the correlation to Bitcoin. Let's look at its correlation coefficient today. Correlation coefficient is 0.94. almost perfect correlation, which means that it lost the correlation for a while because of the hype, but after a time it is beginning to be correlated again. Okay, so what it means is that you need to take the correlation coefficient into consideration, but sometimes an asset can temporarily lose its correlation coefficient to Bitcoin, and in that case you can trade it based off the chart and disregard Bitcoins. Okay, usually small caps, let's say from 200 place and below, they are less correlated to Bitcoin's price action. Okay, now there are a few simple solutions to the correlation problem. The first and the most obvious one is to focus on Bitcoin. Bitcoin is the most liquid asset in crypto, and contrary to what you may think, it is also the easiest asset to trade. So instead of trading two charts, you just trade one chart. You trade the Bitcoin chart. Many traders prefer to maybe invest a little bit of money in position trades on altcoins, but when they are trading only Bitcoin, and in my opinion, it's a very good solution. The second solution is to trade altcoins that have low correlation to Bitcoin. For example, let's look at Kaspa or XDC. Okay, Kaspa, no. As you can see, Kaspa is now correlated. Let's look at XDC. XDC is not correlated. Okay, the correlation coefficient between Bitcoin and XDC is at 16, 0.16, which means that it's a low to medium correlation. So if you want to trade altcoin without regard to Bitcoin's price action, you can, for example, trade XDC. Okay, that's the second solution. The third solution is to trade hype or to trade fundamental news, but ditch the asset when the hype is over. For example, Pepe. Let's take a look at Pepe. Okay. Pepe USDT. Let's take a look at Pepe. Yeah. Okay. What's the correlation coefficient? Minus 0.23. Remember, it's a bit lagging, okay? Because Pepe was going up while Bitcoin was going down. So when you trade a meme coin like Pepe, you can trade it freely and disregard Bitcoin's price action because there is little to no correlation. Okay? And the fourth option, which is the hardest option, is to confirm your altcoin bias against Bitcoin, like I showed you. Okay, let's take another example. Let's take ADA. Okay, let's take ADA for example. Let's see. Okay, on October 21st, ADA got above the range high, tested it as support, and it looks good for continuation, or it looked good for continuation to 27, right? So what I do, I want to take a long position, let's say on ADA, okay? But I don't take the long position before I confirm my bias against Bitcoin. So, I forgot the date, October 21st. October 21st. Okay, on October 21st, you can see that Bitcoin was already in an uptrend. It got above the 28.6 resistance level. The next resistance level was not close, was not even close yet, so you have no problem and you can take the trade. You can take a long trade on ADA, okay? But you need to confirm it first. Now, just a few basic rules and we are finished. The basic rule of Bitcoin correlations is that you long your altcoin only if you would long Bitcoin as well and vice versa. You don't long or short a highly correlated asset without checking against Bitcoin first. Okay? The second rule is that a dump on Bitcoin will certainly mean that your alt will also dump. However, a Bitcoin pump does not necessarily mean that your alt will pump. So that is why it is easier to trade Bitcoin or to focus on Bitcoin. And the third rule is that you do not, listen well, you do not short or long an altcoin just because you are short or long on Bitcoin. You need to examine the assets chart and you need to check for support, resistance, or for order blocks, whatever your method of trading, but you don't just automatically long all your altcoins because you are long Bitcoin, and you don't automatically short your altcoins because you are short on Bitcoin. So what you are doing when you're trading altcoins, correlated altcoins, is you are trading two charts at once. Don't forget it, okay? If you will pay attention to these rules, you will be much better off, and if you will obey these rules, you will save a lot of money, a lot of stops from getting hit, and it will be very good for you, okay? That's all I have for you on altcoin trading. If there is any other subject that you're interested in, put it in the comments. Thank you very much and goodbye.